Okay, everybody. I think it's recording. So I'm gonna go ahead and run over some analysis. I'm gonna run over how I trade. I really want to help traders become profitable. We all have to start from somewhere. Um, I remember blowing account after account after account, day by week by month. It was horrible. And these past 2 months, I've been profitable. Now, don't get me wrong, I have lost. Have I lost big? Absolutely. Have I won big? Absolutely. But I am consistently profitable. And sometimes, when you do lose, you got to start from ground zero again. But as long as you're using proper risk management and your account is at a place that you do really just desire to be at, you're fine. But I kind of want to run down candlesticks and just like induction. I think it's just really important for us to kind of really understand the psychology in the market and not get so tied up in all these indicators and tied up in all these analysis that everybody is sending out in the chat and get tied up in this the smaller time frames like 5 minute, 1 minute, 15 minute. That's fine if you trade off the lower time frames and you profit off of that. All I'm saying is if you are profiting off the smaller time frames, then do not change your strategy. Um, but I know there's a lot of people that really struggle with the smaller time frames and they rarely ever look at the bigger time frame. I would say it is so important. It's the most important to do your top down analysis from the monthly all the way to the hour. I usually start at the monthly because I love to see the overall bigger picture. So when it comes to buying, selling, I want to buy or sell in the macro direction. If I'm ever buying or selling against the macro trend, it's probably because I see an obvious level of support or resistance that I know that it's not going to reverse off of. So I continue with that trend. Um, so here we are in British pound, US dollar. We all know that the British pound, US dollar has been in this big range right here. It's just been ranging, it's been ranging, it's been ranging. And I have been able to profit off this range because I know what it's doing and I go down on the smaller time frame and I create my trends and everything. But I realized that, you know, I lost um once I started realizing that the British pound was no longer doing what I expected it to do. And then I looked at the 4 hour time frame, like, oh, now it's really stuck in this range. So, for example, I want to really, really, really show you guys something very, very like easy that will help you understand, the market. So if we go on, let's not even go to the monthly, let's just go to the weekly time frame. Okay. If you look at the weekly time frame, we all know that the market is down, right? I could just, you know, I can just clearly see where the intended direction is going. It's down, right? And I told you guys earlier in my videos that eventually it's going to break out this zone because this is an obvious level of resistance, and the market will more than likely not reverse and is major continuation if it's at an obvious level of resistance. They created this tap on this resistance level for a reason, and that's to induce traders, especially for those who swing. Now, am I saying like if you traded this all the way down to here or this all the way down to here, which is not realistic. A lot of people don't know um, that they're really going to trade and hold a swing for like 2,000 pips or 1,000 pips. Let's be very realistic. However, people who are selling this know that at least go 50 pips to 100 pips. And if that's the case, then they know most volatile pairs come back to get uh, those who are still swinging, which we call liquidity. We call liquidity zones where a lot of people are putting stop losses above where people are selling, right? Especially the majority, where the majority of people are selling. That's the key. So I can see that this is the downtrend, right? But because it's at this obvious level of resistance and we see this big bullish momentum trend, I'm expecting at least, in my opinion, and I could be wrong, I'm expecting GU to at least come up to 143. And the reason being because this is a British pound is like strong right now. Now, if it doesn't get up here, I'm expecting GU to probably like do some type of pullback, come back up, and then continue down in this initial direction. Now, usually I'll be looking for sales on British pound, US dollar ultimately. Why? Because it's down, but because I understand that this is at an obvious level of resistance, I'm buying. And plus, like, this is obvious, bullish momentum right here. Shout out to my boy Luke. If you do not know who Luke is, Decipher FX, I recommend you, if you want to become a swing trader, to go to his channel. I like to swing. I like to day trade, and I do like to scalp. A scalping is good. Day trading is good. Swinging is good. But at the end of the day, you have to figure out like where do you want to take profit. So what I like to do is just like I like to gain knowledge from smart mentors and fit it in with my strategy. And ever since I've been doing that, it's been working out perfectly for me. So on weekly is down, but because it's bullish, you go back here. Let's just say I just want to let's just delete all this, okay? Let's just delete all this. And you're looking at like, what are you looking at? You're looking at ranging, right? So obviously you would not trade this. But let me tell you when you could trade this. Okay, so this week we was in a range, but the market shifted out as sales and then engulfed these two previous candles, which is confirming a what? A buy, right? Now, this is how I trade. This is how I find liquidity. This is how I find induction. So if we go back, right, and we look on the 4-hour time frame, right, and we seeing that due to what we said on our top-down analysis, there's macro sales, but we see obvious resistance, so we know that it's probably still heading up. Well, the first thing before this candle was ever here, the market was in this area. I think it was at 136,728. So it didn't pull down here as sales yet. So one thing I like to do is I like to find a trend. Okay, I like to find a trend line that is obviously tapping under, tapping on top, whatever you want to call it. And I like to say, okay, when it comes to this trend line, what is the market going to do? Is it going to tap off this trend line and then reverse, or is it going to tap off this trend line and break? Is it going to tap off this trend line and form a false uh, uh, fake out people to sell after breaking the trend line? Because a lot of times it does that. Or is it going to break the trend line and continue to sell? So this is where your candlesticks come in. This is where it's very important to understand what you're looking at. So I look at that's the uptrend, right? It's definitely an uptrend going on. So what am I looking for? A buy. I'm not looking to sell. The only way I'm looking to sell the market is if it's going to give me a buyer's trap after buyer's trap after buyer's trap, and the market just keeps selling off and selling off. That's confirming that okay, it's going down in this initial direction. But it looks like GU doesn't want to go down in this initial direction. So before this all happened, you pull a resistance. And remember, guys, this is the bigger time frame we're looking at. We're looking at the 4-hour time frame. The reason why a lot of you guys are so confused because you're still looking at the 15-minute time frame, the 5-minute time frame, so on and so forth. You're not looking at the overall picture. I'm telling you, if you really want to become consistently profitable, you should definitely look at the bigger time frame and look at what the market is doing. I'm not 100%, where I want to be financially when it comes to forex, but I realize this has helped me become consistent in my profits. This is really helpful when it comes to trading. So I draw up my resistance, right? I'm like, okay, cool. So once the market starts pulling back down, remember, if the market is doing this, okay, if it's creating higher highs, higher lows, higher highs, higher lows, and then all of a sudden it stops, right? But it becomes very choppy and everything. A lot of retail traders will call this what? A double top, right? Now it's fine to sell a double top, as long as you are willing to risk whatever you want to risk, because you would have made technically if you was trading from resistance to support, which is right there, you would have made, let me see, a good 90 picks. Okay, not bad, right? That's pretty good for a double top. But we know good and well that all this up here is nothing but induction. All that selling up here that just continuously taps this level of resistance up here, I call it obvious level of resistance. There's no way that the market's just going to plummet after giving so many retail traders money. Okay, and that's the reason why they're shifting away from sales right now. So when the market, oh sorry, when the market starts creeping back down like this, and it's just creeping and creeping and creeping. So why creep? Yeah, you know what I'm saying? So when the market starts creeping this way, so many of you guys are thinking sells. I don't know why you guys are thinking to sell something that is creeping when I'm gonna look at it like this. If you seen somebody creep into your house, are you just gonna go outside and say, "Oh, what's up, man? Like, what you doing out here? I just see you creeping." No, you're gonna look. You're gonna kind of look. That person looks suspicious, and you go like, "Man, I'm really wondering what this guy's doing in my yard or and creeping at my house." So some of you guys will just be trading this for some obvious reason. I don't know. If you're scalping, I don't care. If you're scalping, okay, cool. Then this doesn't really apply to you because you in and out. You trying to get the money in and out. But for you guys who are trying to day trade, for you guys who are trying to hold, I mean, this is something that's not tradable. I mean, it's look how GU just comes down, wicks people out, comes down, wicks people out, comes down, wicks people out, comes down, then probably necessary at the final moment, it actually comes up and actually wicks all these people out selling right here. Like you don't want to get involved in that mess. So what did I do? I put a trend line on it. Very obvious. Why? Why do I put a trend line on a creepy trend? I call it creepy trend. Why would I put a trend line on a creepy trend like this? Because I know it's called induction. It is inducing sellers. Think about it. The market has been bullish for so long. And then all of a sudden, it wants to just creep and creep and creep like that. And you think just a sell. Now, mind you, there's also liquidity down here from buyers, from people holding as well. So obviously they have to come out, excuse me, obviously they have to come down and take those liquidity out. Okay. Somebody has to lose. Somebody has to get their money taken. This is the reason why we just don't trade out of nowhere. If you want to be profitable, consistently profitable as a day trader, swinger, even if a scalper, like sometimes you just gotta wait. Like forget what people say. Oh, you can make this much money doing this. You can make this much money doing that. Forget what people say. That might not be your way of trading because the way people trade is based off their emotions. You might be scalping and then you get all scared just because you're down $10 and the market going your direction, but you got out so quick because the market's too volatile for you. The market moves too fast for you. The market's not, your emotions is not made for that. Don't believe in the lie that you got to scalp. Don't even believe in the lie that you got to swing. If you don't have the patience of swinging, then don't swing. If you don't have the patience of day trading, then don't day trade. You scalp. I mean, it's that simple. I don't understand why it's so hard. And it's because we become so accustomed to what people have to say. That doesn't mean that we don't take their advice. I have friends that make money, tons of money doing it scalping. I want to say tons of friends. Excuse me. I know tons of people, but I have friends who scalp and they make tons of money, and I've loved to learn from them, and I know how to do it. But I realized that even when I was doing it, it's not for me. First of all, I don't like to be a slave to the market. I don't like to sit here eyeball my eyes like crazy to make money. I like to comfortably look at my setup, make money while I'm relaxing and doing whatever I want to do. Let let trading become a place of freedom, not a place of stress and becoming a slave to this market. Okay. So let's go back to what I was telling you about this analysis. I'm waiting for what? I'm waiting for confirmation after this. Like, let the market do its little junky seller trap, whatever it wants to do. Let the market do that. Okay. So what do I do next? All right. Well, I put another line of support. This is a place of support. All right. Let me see what happens with my Bollinger Band. Bollinger Band. You know, if you and look, the Bollinger Band is great for this. I don't recommend anybody just trading Bollinger Bands or indicators just because. When it goes into the right direction, when it shifts out into the right direction, when it shifts out of the trap, um, and I got this from my mentor Luke. That's when you can use the indicators because the indicators actually helps you get a better entry and confirm your analysis that is going in the right intended direction. Okay, so it broke out this Bollinger Band. That's one. I didn't even have to use this. Even if I use my 200 EMA, it rejected right off my 200 EMA. Now, the reason why I didn't trade the British pound because it was just crazy major news. Well, actually, I did trade this. Excuse me. I did trade this. I traded this big bullish candle and I got out because sometimes the market just likes to shoot up and then shoot right back down. I wasn't messing with it. I got my pips and I got out. See, that's when I was scalping. That's when scalping comes in handy. When you see stuff like this, yeah, scalp the mess out of it. Okay. Um, but it rejected right off my 200 EMA. So simple. But even if I didn't have any indicators, what is the most important confirmation? It's not support, not resistance. It's not even just market structure. It's price action for sure, but it's your candlestick confirmation. If I see that this 4 hour candle engulfed one, not just one, not just two, but 3 and 4 previous seller candles, bearish candles, and closed as bullish, the bad boy is going up. If you have a big account, I don't care how much money you have in that. If you have a super big account, I don't care if your stop loss is 117, 120 pips. You're going to make profit. This market is going to go up. Oh, Jonah, well, I don't know where to get in after that. I don't know where to enter the market. Okay, simple. Okay, so if it closes as a bullish 4 hour candle, go to the 1 hour time frame. Some people be like, oh, we're going to draw a Fibonacci from here to here, right? And more than likely they'll wait till it gets down to this 0. 0.5 zone level. Don't even worry about that. This is what I do. You can do that, and if this is the thing, you got to be willing to miss an entry because sometimes bad boy ain't gonna give you an entry. Okay, so what I like to do is I like for it to come back down here. Why? Because this is an obvious what you call pattern of inverted head and shoulders. But it didn't even do that. It just retraced a little bit and then went back up. What I would like to do is I find the most obvious level of structure that is broken on the 1 hour time frame. Where's the obvious level structure? Exactly right here. You see this neckline? This is, to me, I call this a neckline a little bit still. And even if you place it at the tip of this wick, it gave you an entry. You could have put your stop loss right below this structure. It would have been 16 pips. You would have rolled up for 89 pips. Okay, guys, I'm not making this up. Like, this happens all the time. This is the reason why. This is how I've been profiting off of GU. I mean, even look at this area right here. I think I talked about this before. Look how the market does the same thing over and over and over again, and then it gets so obvious that you can even start trading the adduction and trade the intended direction. Look, you can trade. You like, okay, is that obvious level of resistance is going to sell off down to this trend line again or macro structure again, and it's going to reverse in its intended direction. 100 pips down, 100 pips up, $200. $200 for probably the past 1 or 2 days. All right. And this is the reason why it's so important to understand psychology because you have to understand where they are trapping people. Okay. But how did I know that the market was going to go back up after I seen this seller's trap? If you don't see it, then you don't get this forex stuff. I mean, you guys got to pay attention to the candlestick confirmation. Oh, we're waiting for this W to be a second leg and then go back up, we're waiting for it to, be a little bit perfect, maybe a little bit down and then go back up. No, forget all that. This is the reason why I don't trade M's or W's. I don't care, and I'm gonna say it like this because Luke said it. You don't have to always wait for a stop hunt. People are always waiting for that second major leg and then boom. Sometimes the market is not just going to do that. Sometimes the market might just create a little, extra, leg just a little bit and then go down. But it doesn't have to like, do this exaggerating stop hunt. Everybody's always waiting for this stop hunt and they realize why they always get left, why they all never get entry. So my confirmation was that after I saw that these two candles starting engulfing this previous candle, I'm like, oh, game time. This bad boy is about to come back down. And then I was expecting it, yes, to come back down to its equal, a little lower, and then form that W. But man, what did it create? It created a doji, and then it created this is or spinning top, whatever you call it. I'll call it doji. Um, and I have my reasons for certain dojis. Like I make up my own like dojis. Like a lot of people are like, oh, this is doji. I said, look, man, I see it all over the time frame how dojis, happen. I know when I'm getting in the market. But then it creates this engulfing candle. Not only that, it broke out of my trend line. It broke out of my trend line right here where market structure was. Okay. So what I do usually is when the next candle forms or opens, I put my stop loss down here, 48 pip stop loss. But I usually don't go that far just because I know like I don't think the market is really, really just gonna, tank all the way down like past this 1 hour candle. Now look, 1 hour could be confusing as well. I do recommend 4 hour closure, but on a 1 hour, I love trading the 1 hour when I see engulfing candles. So I put it right below structure, which is right here, underneath the 1 hour closing bullish candle, which is only 30 pips, and I wrote it up for 50 something pips. So I don't know if you didn't understand that. I advise you to go over this video again. It's honestly, guys, it's not that hard. What it really is discipline, consistency, and patience. I still struggle with patience sometimes. I struggle with greediness. I'll show you. I'm gonna show you something. What I did um recently, and I lost $100 on it. I got so confident, so greedy that I lost $100 on it, and I knew for a fact that this was not going to happen. So I put a line up here, and I'm like, oh, it's NFP. This bad boy like been buying for so long. I'm going to trap the market, and they got all this liquidity below here, and I'm just going to sell. I started selling right here. All right, it came up, wicked me out. Dang, $50 lost. And I said, oh, it's going down for sure. Came back up, wicked me out again. And I'm like, crap. And then it finally goes down. But look what it's doing. It's still not really selling. Guys, it's ranging. It's consolidating, right? So what does that mean for me? I could wait for it to tank more, or I can just put another line right here. Or, necessarily if you are a breakout trader, you can wait for a break, retest, and go down, and then wait for it to probably retest off this area of structure before heading back up. But I'm not, you see all that mess? Like, that's too much thinking. And that was my fault. That's where I messed up. And look, based off the 4 hour time frame, there is no confirmation. There is no confirmation at all that this pair is about to sell. And look, I bet you guys will go on a 15-minute time frame and you be like, oh man, y'all see this little M, just did a little dip and then it's going down. See, this is the stuff that gets you guys in trouble. Stay away from it, man. So what did I do? Man, I took British pound CHF off my chart. Right. Excuse me. Why? Because this pair never interested me. This pair is what interests me because it gives me what I need. Um, Let me see. I think there was another trade I took, NZD USD. I sold this. Um, Let me see, Euro USD. I think I bought Euro USD right down here. Yeah, you see another one. Now, like I said, you don't have to always wait for the W's. You don't have to always wait for the stop hunts. When you see this happening, when you see these three bullish candles happening, like in smaller sense, you can call it little white soldiers. But even on a 4-hour time frame, when you see this happening, when you see spinning top dojis happening down here, and then you see bullish confirmation on a 4-hour closure of three candles, that's confirming that this bad boy is about to continuously go up. Now, if you wanted to buy right here, once it engulfed this and fill this wick, you could have put your stop loss right below here with 25 pips. So guys, I'm just giving you something that's so like simple. Like, I just want you guys to like really like think about where you want to be as a trader. Don't worry about anybody else. Don't and stop being bullied by people saying, "Oh, you're making that much money. Well, you could be making this more money." Don't be bullied, because this is not their journey. This is your journey. But let the advice that they give you help you understand that they are right. You could be making more money if you figure out what you need to stop doing, not what you need to be doing, what you need to stop doing. Okay. Lastly, this pair right here was actually a pair I was getting ready to sell, and I got out like a little bit like around here, which I should have put another trend line under once the market started consolidating right here, because I know it was just selling. But even this, guys, like overall, on a daily time frame or even a weekly time frame, is down. Like, there's no way I'm buying this pair unless it's all the way down here. There's no way I'm buying it. It doesn't make any sense to buy it. I'm selling it. So I created this trap, as this buyer's trap. And once this market broke as a bearish, I saw it retest it, and I literally had my stop loss up here. And I was like, you know what? It ain't moving. So I got out, and then all of a sudden, what did it do? It tanked. And it tanked to like, 77 pips. I was actually even one time up here, which I wanted to hold a trade, but because it kept wicking and kept wicking, I was like, I don't know. Once this wick happened, I got in and I had my stop loss like probably like right here. I wrote it down to right here. I think like 30 pips. I wrote it down because I saw that even though this candle happened, I thought the wick was going to be filled. But I realized previously, due to that, sometimes it's just best to stay away from it. But if I would have held that, I would have had 160 pips. I would have been up $300-400 because the lot size that I had. This is confirmation stuff, guys. It doesn't. It's not that hard. Look, 200 EMA rejection. Bollinger Band broke out. Look at it's like a needle, like sticking through a balloon. Like it's not hard, but it's hard because we make it hard. Understand me? Some of you guys are like, oh, well, how did I get back in? Well, okay, look at this. If you want to be cheeky, if you want to be cheesy, like wait for this, market to the structure to be broken, retest it, even if it comes up a little bit, and then just sell it once it shows another bearish momentum down here. You might get an easy another 100 pips. So that's all I wanted to teach today, guys. I just want to really like help you understand. Please pay attention to your candles and pay attention to your adduction and do your top down analysis. Those are the three things you need to pay attention to. And market structure and price action. Okay. If you don't get it, rewatch this video over and over again until it's in your brain. Okay. And stop trading volatile pairs. Stop trading those volatile. Stop trading US 30. Stop trading gold. Stop trading NOS 100. Because some of you guys I see in some of these chats are blown accounts over gold, NOS 100. I just don't understand why you guys trade that pair. Unless you scalp, I'm gonna say this: if you're a scalper, then yeah, you can trade. But if you're trying to hold, don't trade those pairs, guys. Come on, man. Like, I see some of you guys blowing account. I've been profitable ever since I let those pairs go. Like, the pairs that broke me most was gold. That's the reason why I started realizing, oh, no wonder why I'm not profitable, because I'm trading pairs that doesn't make sense to be trading, especially when you have accounts that you're trying to grow. Okay. So guys, I hope that was helpful. Subscribe, like, and share this video if you may. That would be awesome. Thank you.